Healthy and wealthy morning, all. Hope you are enjoying our past podcast videos. So, till now, we covered the how to choose the right investment option. What are the characteristics is supposed to be when we are talking that is the right investment. Okay, and how the mutual funds come into the category of the right investment. Next, how the rich people are following the strategy, how they are becoming the very rich, and what about the middle class and the poor people? So why they are in the same stage only? Okay, what kind of differences it is coming in the investment areas? Okay, and the way of the thinking also. Okay, next, what are the myths and the facts about the mutual funds? And so what are the benefits from the SIP, like compound effect and rupee cost averaging? So these are the various topics. We have the different videos till now. Okay, and in the previous video we seen how the inflation depreciating our income value. Okay, how it's a slowly killing our income potentiality. Okay, and valuation of that. So in this video we want to see the different assets classes. In the different assets classes, how the returns are coming, what is the risk factor it is existed. So people are, maybe they are thinking there is no risk in that products or maybe that investment options, but I want to share the what is the difference kind of risks it is existed, and generally why we are telling this a share market is a good option. Okay, and what is the risk existed in share market also we will tell, and compare to share market how the mutual funds is good. Maybe that we can see in the next video, but in this video we will check it out, like what are the different asset classes, how we need to compare. Okay, what is the risk factors it is existed. Okay, so in the one table itself we are considering the different asset classes. See, suppose I'm investing the just 1,000 rupees. Okay, or maybe even you can consider the 100 rupees also. Okay, that is the possibility we can start investment in the equity. Okay, suppose if I'm taking the different asset classes here. See, till now FD, maybe we got the rate of interest 16% till now, in the sense around the 1980s time. Okay, not now. Okay, but what is the current rate of interest we are getting? Around 6% or 7%, maybe senior citizens, maybe 0.5%, it will be a little bit higher. Okay, the same thing if I'm taking the gold. See, maybe that time with 1,000 rupees itself, I'm able to get. Okay, so now the current price it's become the 50,000. Okay, so maybe I have invested the 1,000 rupees that time around 40 years back. Okay, but now the valuation become the 50,000. That is what we want to highlight here. Okay, so if you are considering the number of times how much it is increased, around 50 times it is increased. Maybe this is a little bit old data, around 1 year, 2 years back, but maybe now if you are taking recent data, maybe it can increase to the 60 times or 70 times also. Okay, and if you are taking any property, that could be any site or maybe any apartment or whatever it's maybe you have invested 1,000 rupees, that's valuation become the 1 lakh rupee out of 40 years of time span. Okay, so number of times if you are calculating, maybe it's increased to the 100 times. Okay, but the same thing if you are coming to the equity, like in the share market or maybe mutual funds or whatever it is, both are maybe comes under the same category, but both are not equal. So generally people are having the mistake and both are same. Okay, in the next video we will see how it is different actually. Okay, see, in the equity, just 100 rupees also you are able to enter. See, if I want to go with the property or gold with the 100 rupees or 50 rupees and all, I can't do anything. Okay, even if you go with the FD, no one will allow for the 100 rupees FD, right? At least they are having the minimum 5,000 or 10,000, something like that. Okay, but in equity and all, you have the flexibility, at least 100 rupees also you can start. Even with the 10 rupees also we can start. That is different story, but minimum amount we are taking here. Okay, that equity, it's become the within 40 years 60,000 rupees. Only 100 rupees it's become the 60,000. How many times it has been increased? 600 times. Generally we are thinking gold property, this is only given 50 times, 100 times, so this is the great. Okay, I'm not denying on these products, maybe we are not getting these returns and all. Okay, as of now we are thinking this is the great, but we have the more than that asset classes are there. That is the equity. Even it is giving the more than that, even 6 times or 10 times more than that. Right? Whatever the returns we got from the gold and property. Okay. So that's the reason only we are giving whatever the returns it is giving from the equity, right? We can't get from the anywhere. As of now, no item can beat the, or no investment item can beat the equity market. But the problem is that we don't know how to utilize that and how to get the returns from that. Okay, that's only the challenge here. So coming to the next slide. If you are seeing the share market side, in the world wise, what is the current position? Okay, see currently India reached to the fourth largest stock market. Okay, see above us Japan, China, US is there. This is the latest information. So you can check it out. What is the valuation to the share market? Since we don't know proper information, and maybe always we are getting the information of the wrong side, like people are getting losses and all, we are thinking that is the wrong goal. We are not supposed to enter into that. Okay, but worldwise, we have the current demand is the, we are in the fourth position. So very soon we are going to reach to the third position, second position, all these things. That is what our aim as well. Okay. See here also some examples we have considered. See maybe year 1981, maybe 10 grams gold value was the 1800. Okay. 1 kg silver value is the 2700. That time Sensex was just 170 points only. Okay. The same thing if you're coming to the 2024. So over the time period of 23 to 24 years. See earlier and all we seen the just examples of the 40 years, right? Now you can just check it out the 20 years, just 20 to 23 years time period also. The same gold, it's become the 63,000. Okay, it's given the 35x time. I mean 35 times the return is given. Okay, returns are given. We are not telling you are not getting the profit or you become the loss. And we are not telling these are not the good investments. Okay, but when you are comparing with the other areas, so what is the position of these returns? That we need to check it out, and based on that you need to take the decision. Okay, we should not always go blindly with the whatever the traditional methods we know, right? So 1 kg silver also given the 27 times returns. Okay, but Sensex given the 423 times. Just you can imagine where is 35, where is 27, where is 423. Okay. So here we are taking the one example related to the company Wipro. So all of us know Wipro company very well, right? So this Wipro company is started around 1980. They came into the share market with the 100 rupees. Okay, I think we have considered the 10,000 rupees of investment that time. Okay, probably we got the 100 shares because of our 10,000 rupees, and each share value is the 100 rupees here. Okay, 1980s too, if you are considering the 2019, even almost 5 years back data we are checking now. Okay, maybe now the value has been increased actually. So 1980 to 2019, if you are considering the share markets here related to the Wipro, okay, they given the multiple times of bonuses. Okay, the stock value has been split a lot of times. By considering all these factors, your number of shares become the, initially you have the 100 shares, but your number of shares become the 2,56,000 shares. This is just a one-time investment. We are not doing the multiple times also. Just 10,000 we invested and kept it like that. In between we are not taken, we are not touched at all. Okay, that case what happened? So just to check it out the number of shares only. Your 100 shares become the 2,56,000. Okay, if you are considering the valuation, what is the valuation it's become? See, maybe we invested 10,000 that time, around 40 years back. What is the current shares? 2,50,000 is there. And if you are taking on and average, the current share price is the 550 like that. Okay, this is still the data of the 2021 we are talking. The total value become the 1,408 crore rupees. Even we are not added up the dividends and all, whatever they given in between. With that only, you can check it out how much the income it has been generated, how much wealth it has been generated. Do you think if I do any kind of a business or any kind of investments I am doing, is there any possibility I can create this much of income within 40 years of time? And that too, simply you are invested and leaving like that. You are not doing anything here. But if I'm taking the other invest areas, what happens? If I'm taking some business, or maybe if I'm investing gold, or maybe if I'm investing in the real estate, simply I'm investing and leaving, that will work out. Always we are having fear, right? Who will take it up? Who will do the kabja kind of things and all? Okay. So whether land is there or not, someone is occupied or what? Okay. So all these tensions will be there always. If you take the gold, where we have to keep? Purchasing is good, but where we have to keep? What is the storage? What is the security? Right. Always we are keep on, our mind will be going into that level only. At the time of purchasing, you are very happy. But what is the next consequences? What is the security? What is the occupation things? What is the taxation things? Okay, so these and all always giving the tension to the people. But here, there is no tension, nothing like that, simply invested and leave like that. To leave like that, you should have the patience here and you have to give the time period here. That is what the main criteria in all these areas. Wherever we are talking this liquidation part and what are the strategies the richest people are following, there also we told the main priority they are giving to the liquidation. Liquid kind of assets only they are investing, right? They are given the certain time period. That's the reason only that's grown like that. It's not simply 1 year or 6 months or 5 months or something like that, right? So people are not aware of the strategies how to implement. That's the reason they are losing the money. Or maybe simply they are satisfying with the whatever the returns it came. Just 10% returns came, okay, that is happy. Just come out from the market. 20% returns came, okay, happy. Just come out from the market. If it is reduced, okay, that is also happy. Okay, you can come out. You are thinking, okay, I'm able to save a lot of loss. But you don't know how much you lost and actually how much it has to grow. Okay, so that's the reason we are telling share market is good. But at the same time, I'm telling share market is not good also. What is the reason? See how you got the multi-baggers or how your income has been increased like this. See, n number of examples we have in the market. See, even Infosys become like that only. Maybe you could have seen a lot of stories. Infosys driver become the equivalent to the Infosys Narayan Murthy sir's worth only because of shares only. Right? Like this, we have a lot of examples. Okay. Even if I take the best example, MRF share, you can check it out in the Google and maybe you can mention in the comment. Okay, what is the current value of the MRF? Okay, see, it started in the 1994 with the around 11 rupees cost only. Okay, so present value it is running in between the 1,40,000 to the 1,50,000. One share value we are talking, right? Where is 11 rupees? Where is 1,50,000? So last year April, just the valuation is the 1 lakh only. When you are taking the 1 year span period. Last 1 year, it's become the last April, the valuation is the 1 lakh. That time only we talk that is the greatest share and it has the top value within our India's shares. Valuation wise, we are talking. Just a share value we are talking. It's not the capitalization wise. Okay. But within another 1 year, it's become the another 50% returns, 50,000 it's increased. That time itself, people thought, okay, the time is gone, MRF will be down. It's already reached to the peak stage. Right? So that kind of benefits is there. At the same time, we have the problems also there in the share market. So you need a lot of skills over there to capture that kind of a market. Okay. And to capture that kind of returns as well. Okay. So here you have a lot of examples. See some companies like S Bank, DHFL, Vakrangi, even Kingfisher shares. See, these are all no more existent now. Maybe S Bank is existed, but you can see the valuation, how it is there. 2010, its valuation is 52. It's went to the 404. And now the current value is the 15 rupees only. Maybe it's reached to now 20, 25 rupees as current value. Okay. See, it's went to the very peak stage and at the same time, it's went to the down also. So we can't predict when it will be increased, when it will be decreased, what the things will happen. Okay, so even Infosys companies, these and also maybe they won't think that can be reached to this level, right? When they are in the startups. So that is the problem in the share market. There is good part. At the same time, the challenge is you can't imagine which company will give good returns, which company won't give, and which company will become the multi-bagger, which company is becoming the topper. Okay, which will make you very beggar also, right? So to avoid all these problems only, actually we are talking the mutual funds. Since these are managing by the professionals, they are the experts. They know how to play with all these instruments. Okay, we are not aware of all this in and out. What is the terms and conditions? Okay, when it can give the good result, when it won't give the good results. Okay, we can't predict, and each and every moment we can't manage all those things, right? See, maybe we can't say. See, maybe one time I got the good returns. Maybe one time I got the 50% returns within 1 week, or maybe within 1 month, and then you can't say I'm the expert, right? One time maybe you got it. That's whatever the reason it's maybe whatever your strategy has worked out, or maybe you have some lucky, maybe the time period is good, or whatever it's maybe. But why you are not able to get every time that benefit? If you are thinking you know everything, if you are become the expert, right? That and all you need to think out. Okay, so this to avoid all these kind of risks only, and to get the all the markets profit. It's not only the share market. Okay, already we considered the facts and myths one video. There we explained why, where and all places actually mutual funds are investing, right? From all the places, whatever the potentiality it is there to get the returns, that entire returns it is coming to the customer, since these are managing by the professionals. Okay, there will be a lot of research and analysis teams. Okay, even that fund managers, or maybe that team, they are really going to that particular companies where and all they are investing. They are verifying the details. Based on those informations only they will invest. It's not based on the just general news, or maybe someone is telling this is company is good, or this is my company, that's the reason I want to invest there, right? We people only following all these strategies. Companies doesn't follow all these strategies. They will give the facts only. What is the statistics? What is the balance sheets? Okay, what it is telling clearly, and they are personally going and verifying. Based on that only they will take the decision. Even they will go into the vendor level also. It's not only the company, even they are going into the vendor level also, then they will verify whatever the company is telling fact or not. Based on such things only companies are taking decision. I mean mutual fund companies are taking decision, and they will start the investing in that companies. Okay, that's where we are in the safer mode. Okay, so this is what I want to convey. Basically, in the different assets, what are the things it is happening. And even one more I want to tell. See, some people are thinking FD is good, or maybe gold is good. Okay, see, even gold also we have the negative returns for certain period. You can check it out to 2013, 2015, -5, -5, -10. This kind of returns also it's came. Okay, see, suppose if I'm taking the 7 years of returns, see, sometimes maybe I got the 18%, sometimes I got the 13%, sometimes I got the 27% also. But on and average, if I am taking this, become the just 6.25 only gold side. Okay, but if I'm taking the share market, right, what happened here? Also we have the higher ones. Here also we have the negative ones. Okay, but on and average, it's become the 14% returns it is giving. Just we have taken the just BSC 500 index. Even it's not the all the shares. Okay, so this is what the difference. We need to compare and check it out. Which investments is giving the what kind of returns. Okay, and people are thinking FD is good, right? So no banks have the any kind of problem. Whatever I'm investing there, I can get my entire money. Okay, see, olden days we have the safety for the just 1 lakh rupee only for your FD. If by any chance bankruptcies happen, or bank in the loss position, or maybe a lot of debts are happened to that, in that position, whatever you are invested, like 5 lakhs or 10 lakhs or 1 crore, whatever it is FD there, you will get the just 1 lakh rupee only. If in that kind of scenarios, right? So recently it is increased to the 5 lakhs. That is also insurance it is happening. It is not the direct cash. Okay, including your interest and capital, you will get the maximum 5 lakhs. It's a maximum. It is not the minimum. Okay, there is no guarantee up to 5 lakhs also will get or not. See, maybe my investment I done 10 lakhs in the FD. By any chance bankruptcy happened. Okay, I can get maximum 5 lakhs rupees only. I don't get the more than that. Up to 5 lakhs I will get or not, I don't know. That's based on that scenario, banks will decide, or maybe RBI will be decide. Okay, that's you need to understand. So maybe people can think where is the bankruptcy is happening. You can check with your aged people or maybe grandparents and earlier days and all, how many banks are bankruptcy happened. But nowadays it's reduced after the RBI came into the picture, or maybe they are following the strict rules and all. But there is no guarantee, right? No banks can happen like that. There is chances. We are not saying compulsorily it will happen, but there is chances, and no one can guarantee. No bank can become the bankruptcy, right? So, what basis you are thinking the FD also safer to me? Okay, so this is what the things you need to understand first of all. Okay, so based on that, we need to take the right decision. Where I need to invest, how much I need to invest. Everywhere we need to invest. It's a gold also we need to invest, and silver also we need to invest, and real estate also we need to invest. Share market also we need to invest. Mutual funds also we need to invest. So we can segregate like this. But if you know mutual funds how it is working, actually you need not to invest in all these places. Just mutual fund is enough. Since all the diversification they are only taking care. All the sectors they will only take care. But even if you don't believe that much, or maybe you don't like that kind of investments, better you can split it into the different locations or different areas. But how much percentage we have to keep and all? So our financial advisors will help you. Okay. So this is what I want to convey by comparing the different kind of asset classes and what is the risk factor it is existed. Okay. So why we are recommending the mutual fund is the best, and what about the equity market as well. Okay, hope it's given the clear cut idea to you people and enjoyed the video. Okay, so thanks for your time, and please ensure to give the like symbol and give your comments and feedbacks, and at the same time please share with your friends and family. So thanks for your support.